Hi everyone, welcome back to the channel. If you've been watching my videos and notice that my background is different, it's because I recently put the house that I was living in on the market for sale, moved into a small one-bedroom apartment while looking for a new house to buy. So today, I want to share my thoughts on how the Federal Reserve cutting interest rates would affect the housing market. If you are a homeowner, a potential buyer like myself, or just curious about real estate, this video is for you. Watch to the end where I share some tips on how to approach the home buying process in today's environment. Let's break it down. What does it even mean when the Fed cuts rates? Last month, the Fed announced they're cutting rates by 50 basis points. Historically, the Fed cuts rates when the economy is slowing down or in a recession. So the rate cut is meant to stimulate the economy by encouraging borrowing and spending. The Fed does not directly control the mortgage rates. Instead, it controls the federal funds rate, which influences the yield on the 10-year Treasury note, which serves as the index for most mortgages in the US. So when the Fed cuts Fed funds rate, this eventually translates to lower interest rates on the mortgage. Here's a catch. The Fed cutting 0.5% does not mean the mortgage rate will also drop 0.5%. It's not a one-to-one relationship. Take, for example, on September 18, when the Fed announced 50 basis rate cut, the 30-year fixed mortgage was at 6.15%. This past Friday, the Bureau of Labor Statistics announced that the unemployment rate dropped to 4.1%, showing a strong labor market, and the 30-year fixed mortgage jumped higher to 6.53%, higher than the day Fed cut rates. This is because mortgage rates are influenced by other factors like investor sentiment, inflation expectations, and the health of the economy. If you are a homeowner, it may be tempting to refinance right now, especially if you bought at the peak last year with close to 8% mortgage rate. I would recommend that you wait and hold off on the refinance for now. According to Fed's own publication of the Summary of Economic Projections, the Fed is projected to cut an additional 0.5% before the end of 2024 and likely to continue cutting rates in 2025 for 1% and in 2026 for another 0.5%. Even though the interest rates are coming down, it will take a while for people to actually get the benefit of the lower rates. So if you can wait even just into early next year, then it would be to your benefit. When you're ready to refinance, make sure to crunch the numbers and see if the savings outweigh the costs. Refinancing your home is not free. You have to pay 2% to 6% of your loan amount as part of the fees. You also extend the life of your loan. The rule of thumb has been that refinancing is a good idea if you can reduce your interest by at least 2%. In terms of home prices, U.S. housing affordability is at the lowest level in history. Mortgage rates are a big component of affordability. So when the mortgage rates come down, this could help out the housing market and potentially unlock some supply. But it's not clear just how much this will affect property values. A lot of people out there on TV and social media believe that the rate cut could lead to higher home prices because a cheaper mortgage can bring back more buyers to the market and increase competition within a limited supply.
Prices are going to go through the roof.
Because housing supply is not likely to change drastically. Currently, the national average of 30-year mortgage hovers around 6%, and nearly 60% of the active mortgages have locked-in interest rates below 4%. So it does not make a lot of financial sense to give up a 3 to 4% low mortgage and take on higher rates. History can repeat itself where in 2021 and 2022, after the Fed cuts rates in response to the pandemic, the housing market exploded with double-digit home appreciation. But there are others out there that believe the rate cut is not going to make a significant difference to the property values for two reasons. First, the Fed usually cuts rates in reaction to an adverse economic outlook. A higher unemployment rate and a weaker economy will bring a whole different set of challenges to the housing market. Second, as the rates come down, more sellers that have outgrown their homes may come back into the market, and we are likely to see the market rebalance and maintain some kind of equilibrium between buyers and sellers and keep housing prices stagnant. If you are waiting for a market crash like in 2008, many economists believe it is unlikely. The 2008 Great Recession was caused by loose lending practices and rising subprime mortgages. Those conditions do not exist today. Most homeowners today benefited from the historically low mortgage rates and are choosing to stay put. So, where do you think the housing market is going? Let me know in the comment section down below. The housing market is complex, and the Fed rate cuts are just one piece of the puzzle. Even though lower rates may be tempting, buying a home should always be a strategic decision and not a reaction to changes in interest rate. There are many uncertainties in the housing market right now. And if you are in the market for a new house, here are 4 considerations and tips to approach this process. First, home appreciation is not guaranteed. Real estate market goes through cycles. Here is a personal example. When my family moved to the US in 1989, my parents bought our first home in California for $450,000 at the very peak of the housing market, right before the 1990 recession. While living in the house, my parents put in a new roof and remodeled the swimming pool. 12 years later, we sold the house for almost the same price at $455,000. The $5,000 appreciation did not even cover the cost of those updates. Currently, Redfin values this home at 4 times more at $2 million. The moral of the story? If you plan on buying a house, you may need to buy and hold with a longer time horizon, which is our tip number 2. For my parents' first house, the price dropped right after their purchase, and it took many years for their home value to recover. But here's something to consider. Right before the housing market collapsed, the median home sales price peaked in March of 2027 at $257,000. Today, the median home price in August of 2024 is around $420,000. So if you hold the property long enough, you can ride out any downturn. Many economists are projecting a potential recession ahead. It's even more important now to plan your home purchase that fits your financial health. Make sure you set a realistic budget and avoid overstretching yourself on the purchase. Stress test your budget for unexpected scenarios like job loss or increased expenses. Keep an emergency fund that covers at least 3 to 6 months of living expenses, even after buying the house. Next tip is to look for fixer-upper or value-add properties. Most people look for turnkey homes because they don't want to deal with the hassle of renovation. But it can be advantageous to go after fixer-upper homes because they give you significant upside potential once the home is renovated. This way, you create a larger spread between your purchase price and the market value. Also, fixer-upper homes are less competitive than turnkey homes. Consider any unique circumstances like estate, divorce, or relocation. Motivated sellers are likely to offer better deals even in a hot market. Last tip, timing the market. Even though it's impossible to time the market, you can be cautious about the timing. Meaning, you can pay attention to better opportunities like the seasonal slowdowns. Typically, in October, when families are busy with back-to-school activities, through the holiday seasons in November and in December. And instead of paying attention to national trends, focus on your local market. Some areas may continue to appreciate even if overall prices stagnate. For example, home prices have fallen 11.2% in Miami, Florida, and dropped 6.3% in Denver, Colorado. But here in Los Angeles, home prices are not showing any signs of weakness. Last month, I put in an offer for a house and was outbid by 15 other offers. The house was sold to a cash buyer at 50% over the asking price. Thank you for watching. I really appreciate your support. If you find this video helpful, share it with someone that can benefit. Please like and subscribe. It really helps out the channel. See you in the next one.